Good day, guys. Welcome to Forex Walker. Welcome to episode 68. Now, on this episode, I'm inviting you to a live stream that is happening at the moment. It's called the FOMCs. I apologize for the commercial that you are seeing here, but this is a live broadcast in the FOMCs. I will show you what it says. Oh man, now I have two advertisements that I need to deal with before I skip. Let me pause this a little bit. This is the United States, and they are okay. Previously, they talked about the market at the moment is responding to what Jerome Powell said. I think it happened about 2 to 3 weeks ago, and it sent the US dollar went bullish because of what he said. And it was actually a long term trade, and it happened at a time that I was not expecting it to happen. Because at the moment, I'm not pricing in any bullish moves on the euro because Donald Trump just introduced a government shutdown. And in that government shutdown, uh, a lot of things in the government uh, went into a standstill overnight. And that does not mean they don't have any trade or what I call the it's not that they don't have any movements in doing business and all of that. Government was shut down at the White House, uh, but the businesses are continuing to do what they're doing. So the government shutdown took much longer than I expected, and that's the reason why I'm not really looking into any bullish moves. But if the U.S. president announces that they are uh, canceling the shutdown, the U.S. dollar will plummet. Will actually go bullish because of uh, based on market sentiment or expectations, because a lot of people believe that a lot of investors, hedge funds, are waiting for the government shutdown to stop. And when it stops, a lot of hedge funds are going to buy the currency, not based on macroeconomics, but just based on the expectations of the currency going bullish because it was halted. Just think about a car that was at rest and now it takes off. So it's a normal uh, perspective for investors to believe that the currency will go bullish and they will buy it based on that. However, what I called you into this FOMC's live stream is because of what happened 3 weeks ago, where we had to buy the US dollar based on what Jerome Powell said. This Jerome Powell is the head of the Federal Reserve, or the head of the Reserve Bank. He's the governor. So he talk. These guys are like the press or economists. So they asked him a question that says, "Are you going to cut interest rates in December?" And this guy with his spectacles, he actually said uh, himself and his panel were not even thinking about cutting interest rates in December. They were not even discussing the interest rate cuts in December or this year at all, after which they introduced 50 basis points interest rate cut. And the US dollar rallied. It gave us a rally, and that rally, let me show you the rally that happened, after which he said that this is US government bonds 10-year yields. And this is something that I use when I buy the US dollar. And here I will show you uh, what happened to the US dollar. Let me go for USD, Euro USD actually. Let me go, but the move will be bearish, so just watch out for that. We're gonna be talking about buying the dollar, but in the dollar, the movement will be bearish. So when we buy the dollar in this currency pair, Euro USD, we are going to sell Euro USD. When we buy the euro, we're going to go bullish. So when you go over there, you are buying, and when you go down there, you are actually you're buying the euro when the market moves higher, and you're buying the USD when the market is moving lower. So this is the time, 17th of September, the time that which Jerome Powell said what he said. In fact, he said it, I believe it was here, and the market plummeted on this daily time frame. I think it was, remember, those guys from their side, uh, daytime for us is midnight. So when they were discussing what they were discussing, when midnight came, it we had a spike upwards, and then this thing started selling. A lot of investors do not believe that the US dollar will actually gain strength because of the government shutdown. But after which, remember when the central bank says we are not cutting interest rates, it is a bullish signal. And when they continue to cut interest rates, it's a bearish signal. So once they hold interest rates, so when he says they're not even talking about December or cutting interest rates at all, when they're not talking about interest rates this year after that 50 basis points interest rate cut, what happens is that any hold in interest rates is actually a buy in the US dollar. So I want to show you something here. The trade that I took after the FOMCs, when they introduced an interest rate cut that lasted for, I apologize for the time that it takes to load. Uh, so when they introduced those 50 basis points interest rate cuts, what happened is that, oh man, this thing is taking much longer than I was expecting, and we're actually running out of time now. Let me just pause a little bit. So, because of what they, Jerome Powell's, when they did the 50 basis points interest rate cuts, I think we were somewhere up here, and that's why I decided to hold. It was in October. I decided to hold this long-term move. However, there's a high possibility that we might break this previous low here, because of what Jerome Powell said when he said they're not even talking about interest rate cuts at all in December. So right now they are live streaming, and these are the comments. Those are the people who are listening to. As you can see, their names are like XAU USD. Those are gold traders who are watching this. Let's just listen to what he's saying at the moment. It says live here on YouTube, and I want to show you here. It says US Fed rate cut live, and whatever that they're saying. So this is Jerome Powell. There's an important point that he said. He talked about a 2% benchmark on inflation for the US. So that is very important because when you take trades, you want to see an extreme divergence from that 2% mark, the 2% benchmark. If they you see an extreme divergence from it, whether it is bearish or bullish, you need to know that the hedge funds are going to take advantage of the US dollar, because they expect Jerome Powell to do something about it, to either introduce interest rate cuts or hold interest rate cuts. So the meeting here is boring, but what is important here is the questions that are asked to him by the press. When the press is asking questions, the press is actually a team of economists in the country. So they come from CNBC and all of that. So you can actually watch this thing from Bloomberg or CNBC. You can watch it live, or you can just Google Federal Reserve or just FOMCs. The shortest way to say it is through the FOMCs. So uh, when this trade happened, I did not hold it because this is actually a buy. Let me show you the best way to trade it, which is with a safe haven, the king of safe havens, the JPY. So uh, So when you trade it with the JPY, it actually flies much faster. This is the 17th of September. So this thing started here and it jumped after, which remember, the reason why you see a jump like that is because the JPY is also getting weaker, and the US dollar is also being bought, especially most investors are going to take advantage of the swap that you get between the US dollar and the Japanese yen. But you can actually continue to watch it live, but you need to understand macroeconomics, because if you don't have a macroeconomic background, you may not understand the gibberish that he's saying. So what happens is that he introduces a speech uh, based on what he's reporting from the discussions that they had. And the important part that is favorite to me is when the economists or the press from CNBC's, so or when the economists are asking him questions, that's the part that I like, because that's the part that moves the market. What he says is not really that much important. Yes, he might say we had an agreement of cutting interest rates, but that does not really move the markets that much, according to me. The biggest moves come when they ask him questions, because he may not talk about interest rate cuts in the in fact, in the previous meeting that they had, the meeting that moved the market, how the meeting that moved the market like this, they did not talk about interest rate cuts, but a member of the press or an economist from CNBC or Bloomberg, one of those people, asked him a question, and what he said actually moved the markets. And the movement was created because they asked from something that he didn't say. They asked about interest rate cuts in December, and he said we did not even think about that or discuss it. So it moved the market. Thank you, guys.